Okay, good afternoon everybody, can you hear me? If you can hear me, if somebody could just tap a Y into the box for me, that'd be great. Anthony says yes, okay, thank you Anthony, appreciate that. Okay, great. And can you see the screen? Is the screen up? Sanj says yes, okay, thank you Sanj. Screen is up as well, yep, Anthony, okay, fantastic, thank you guys. Okay, so good afternoon everybody, my name is John Fortune, I'm the head analyst at Ethical Trading Institute, where we teach people how to trade the markets based around psychology, which is how the banks and the institutions trade. We don't use any indicators or anything like that. And what we're going to do today is, I know some of you have been in the room and you come on Mondays all the time, but for the new people in the room, what we're going to do today is we're going to have a look at the fundamentals that we have coming out for this week. And then we're going to jump over to the charts and we're going to have a look at the US dollar index and oil, which is what we always start with. And then we're going to have a look at some of the pairs that we're looking at for this week, and we're going to also highlight some of the key levels of support and resistance in those pairs, and we're going to highlight some targets that we're looking to achieve this week as well. So we're just going to basically create a plan for the week ahead, which means we can execute our trades based on a plan rather than spontaneously taking trades during the week. So with that said, let's go and have a look at the fundamentals for this week. So I'm just going to put over the economic calendar over here. Could somebody let me know when the economic calendar's up? It's up. Okay, thank you, Sandra Star. Michael says up. Excellent. Thanks, John. Thanks, Michael. Okay, great. So have a quick look. You can see if we look down on for the fundamentals for today, you can see we don't really have any major news. I mean, those who come into the room, or those of you who trade fundamentals, or about the fundamentals, will know that they're usually highlighted. The major events are highlighted in red. So you can see we don't really have any major events today. These are all news, fundamental news that can move the market, but we don't anticipate them causing any major volatility. So for that reason today, we are not going to put any of those down into the spreadsheet, which is what we do each week. We plot the major news into a spreadsheet and then we have a look at it. So pretty news light today, but if we go down and have a look tomorrow, and it doesn't stay that way for the entire week, we actually have some major news events this week that we're going to be looking towards. And the first one comes on Tuesday morning, which is in the form of the Aussie interest rate decision over here. Now the cash rate and the cash rate is in orange, but actually, I mean, the cash rate can move the market as well if there's a cut or if there's an increase, a rate hike. Now looking down over here to the forecast, previously we had 150 as the interest rate decision, and then we had an expectation now for 150 being kept, or for the interest rate to be held at 150. For those of you who looked previously, if you go through the monetary policy minutes meetings from the RBA, you will see that what they've been saying recently is that in fact they they feel that an increase in rate hikes at this time would be counterproductive for what they're trying to achieve in the economy. So the prediction is that it will stay the same. So unless this comes out as a cut or an increase, the actual release of the interest rate decision probably won't cause too much volatility. You probably see a little bit of a spike, a little bit of volatility, but not too much. But then we also have the RBA rate statement, which comes out just afterwards. Now this is what does have the ability to move the markets, and based on what they've been saying before, because we can only go on what we can see they've been saying previously, we can't predict the future. So going based on what they said before, we could expect maybe some slightly hawkish rhetoric to come out of the Aussie, and therefore we could be looking at a boost in the Aussie dollar early hours of tomorrow morning. So we're going to put this down, and I'm going to go through the others a little bit quicker, by the way. We're not going to take too long on these. But I'm going to put this now down on the spreadsheet. So if you just give me a second, this will go down, for those of you who know, as a major news event. So we are going to have Aussie on Tuesday with a capital X. Now, if we scroll down a little bit further, we do have manufacturing PMI coming out for the pound at 9:30, so we're going to put down a small X for the pound on Tuesday as well. Now, for those of you new in the room as well, we put down small X's for things like, as you can see, PMI, manufacturing PMI, and generally things that aren't the headline, the big news events, which are mainly unemployment data, generally speaking, is GDP, interest rate decisions, and also speeches given by the governors of the banks, etc. So these will all go down because these have the ability to actually fundamentally change the market trend-wise. So we do have that at 9:30. So we're just going to put that down as a small X. 3 o'clock, we also have ISM manufacturing, as you can see over here. So we are also just going to jot this down as a small X for Tuesday for the US dollar, because we're going to need to keep an eye on it because it can produce a little bit of volatility. So that will go down on Tuesday as a small X for the USD. Then we look down towards New Zealand. We have employment change and unemployment rate coming out at 11:45 on Tuesday. So we're going to put down a capital X Tuesday for the New Zealand because that does have the ability to move the markets fairly considerably. Now, if we go down and have a look at Wednesday, we start coming towards the midweek over here. You can see that we are not entirely done with the major news events. We do have a trade balance coming out for the Aussie at 2:30 on Thursday. However, I know this is down as major news, but generally speaking, I mean, unless we see something really major or we see some real divergence here from the forecast, this probably passes a non-event. So we're not going to put down the trade balance. But if we go and look at services PMI, we see that on 9:30. Now, services PMI, as those of you in the room know before, is quite a significant one for the pound because the UK economy is mainly a service-based economy. So compared to, say, manufacturing PMI, services PMI has the ability to move the pound a lot more than some of the other news. So for that reason, we are going to put down a capital X, consider that real major news on Thursday for the pound. So we'll go back to there. That'll be a capital X for the pound on Thursday. Now, if we look further down, you can see we actually have an interest rate decision on Thursday as well for the pound. So that's going to be 2 X's. So just bear in mind, guys, if you're trading the pound, it could get very, very volatile on Thursday. And in fact, when you get this much news in one place, especially when you can have conflicting data coming out, you may consider just stepping aside. But that will be up to you when the time comes. So we have unemployment claims, which we know come out every week for the US dollar. So yes, it's marked as a major news, but we're not going to put that down. We do then have ISM non-manufacturing as the last thing on Thursday that we're going to look towards. In fact, do we have we missed oil inventories? Let me see, what is the oil inventories? That Wednesday. Oh yeah, crude oil, sorry, we bypassed crude oil inventories on Wednesday here, which we always put down as a small X for the CAD. So you always want to bear that in mind because oil does affect the Canadian dollar. So when oil is going up, generally speaking, Canadian dollar will go up, and when oil is going down, generally speaking, the Canadian dollar will go down. So we put a small X for that. We have ADP non-farm employment change by over here on Wednesday, but this is essentially a private form of the non-farm payrolls, which we can see down here. On Friday, so it's essentially a private company does a bit of polling and they try and predict it in advance. But we are not going to put anything down for there because the big one really is the non-farms. The government release data over here. You'll find ADP on a Wednesday very often passes as a non-event, so I wouldn't worry too much about that one. But if we look down here now, we will put the final one in on Thursday for the US dollar, which is at 3 o'clock, and then we're going to move to Friday where we have the big one for the week. So let me just put that down for the US dollar on Thursday. That's a small X. And then coming into Friday, as I just said, it's the first Friday of the month. In fact, it's not even the end of the month, is it? It's the end of the month today. Okay. Well, normally they do non-farms. It's the first Friday of each month, but oh yeah, of course. Sorry, I'm getting confused because I'm looking today and I'm thinking today's not the first. Today's still the end of the month, but obviously by the time Friday comes around, that'll be the first. Okay, so it is the first Friday of every month. So as you can see here, non-farms is going to be the big one. Now we also have a similar thing coming out for the CAD. We have unemployment rate. We're going to put down a capital X for the CAD, but we're going to put down capital X for the, of course, for the US dollar on Friday, and this is going to be the big one. So depending on how the market's set up, because we have to see how they're going to approach these pieces of data, because what you'll find is very often you have the smart money who very often know all of this stuff in advance, and they know what's going to come out, and you can, if you understand how they trade, you can watch what they do in the build up to these economic data releases to try and get an idea of how they're setting up to trade them, and therefore you can also capitalize on them. But we need a bit more information. It's a bit far in the future now to try and make a plan based around this data. So that's all the fundamental news for this week. If I go and grab the spreadsheet now for you, you can see just a quick visual of the news that we have this week. So if you do trade news events, then you can see that the big one is going to be on Friday over here for the US dollar. Pound is going to likely get very, very volatile around Thursday. So personally speaking, is a very good chance myself and those of us in the ETI live room will be generally just avoiding this on Thursday, because it can get a little bit too volatile, especially, like I said, with conflicting data or data that could technically be conflicting. And then obviously we also have the Aussie and the New Zealand over here. So there's a couple of ways we're going to be looking to trade this. We are going to be looking at Aussie pairs, and we're going to be looking today, for example, in some of the Aussie pairs to position ourselves into the trade. And we want to position ourselves in on the Monday where we don't have any economic data, looking for Tuesday to act as a catalyst and to push the trade that we take, any positions we take today, in the direction of the trend and hopefully towards the target without getting us stopped out or whipped out. So we can take small entries on the Aussie pairs today, and then this will hopefully be the catalyst for the rest of the week in the Aussie pairs. If you go and have a look at the pound pairs as well, there is a possibility to try and position yourselves in early if you want to get involved with this data over here. But with the US dollar index, where this is on a Friday, generally speaking, unless you're willing to hold this over the weekend or you're going to hold it for a number of weeks, you may find that the way to trade the US non-farm payrolls or the US dollar index with non-farm payrolls is in fact to get your trades in early over here, and then by the time it comes around, be out of them. So there are two different ways you can trade these kind of news events. So I can see there's a question here from Sanj who says, new to this, what does the spreadsheet look like? Okay, so this is what the spreadsheet looks like, Sanj. So all it does is just provides a very simple visual, so you can see straight away that here is the high volatility, here is high volatility, here is high volatility. So if you are taking trades in the lower time frames and you're taking very tight stops, if you are taking those trades on Tuesday or say on late on Monday evening or whatever, you need to have some space between your entry and your stop before this rolls around. Otherwise, you're likely to get stopped out as a weak hand. So this allows us to plan for two things. One, it shows us when we can trade with tight stops over here because there's a lack of volatility. And two, it shows us where the big moves are going to be. So because you trade these news data events in a different way, you have to widen your stop and you have to allow for an increase in volatility. So you can't trade the same way every single time. Does that make sense, Sanj? Yep, okay, great. Okay, so now let's go and jump over to the charts and have a look at some of the things that we're looking at for this week. So I'm just going to put the spreadsheet back over here. And let me remove the calendar now, so we know what we're looking for on the calendar. Okay, so could somebody just let me know if the US dollar index is now on the screen? Anthony says yes. Thank you, Anthony. Okay, so we're going to start off by looking at the US dollar index, which is a basket of currencies pitted against the US dollar. Now, the reason we look at this, and I know, again, some of you who are already in the room will understand this, but for those of you who are new in the room, we do this because generally speaking, the rule of thumb is that if you have the US dollar index moving to the downside, then you will very often see an increase inversely in the euro, the pound, the Aussie and the New Zealand to the upside. Or if you have the dollar index going to the upside, you will generally see the euro to the downside, the pound to the downside, New Zealand to the downside, Aussie to the downside. Now, it's not an exact science because you can have US dollar index going down, and you might have euro down. So you might have euro up, Aussie up, pound up. You might have a weak New Zealand. So it's not exact science, but that's the general rule of thumb, and it's why we always start off with the US dollar index. So looking at the US dollar index, we can see that the US dollar index has been in a downtrend for a while. It's been making lower lows, lower highs, lower lows, lower highs. So it's been trending to the downside. And last week we had a target set on the US dollar index at 11,883. So this was actually the target from last week that we were looking for the US dollar index to come down and hit. And as you can see, I mean, it doesn't do this all the time, but it bounced and it respected this almost to the, in fact, I think it was to the pip. I think the low over here is 11,883. So we are in a one of my least preferable positions in a trend, which is that we are in a downtrend, but we're sitting at support. So I do expect this downtrend to continue, and we are looking for further declines in the US dollar index this week, which would see pound to the upside, euro to the upside, Aussie to the upside, New Zealand to the upside. But we do have an increased risk of a bounce at this point here, and we might even see another pullback up into this area, which would mean if we do, and we're looking for longs in, say, the euro and the pound, you may see a little bit of a pullback first as the US dollar index pulls up, maybe into this area somewhere, maybe retests this support level over here again. Might see a little pullback first before we start to see the moves up and the declines in the US dollar index. So just because we are at a support, you don't, here's a tip for you guys, you don't want to, you might have heard buy support, sell resistance, but if you're in a trend, you definitely do not want to do that because this thing's just going to keep continuing down. Here, for example, if you bought here, you're going to get lots stopped out here. If you bought here, you get stopped out. So buying support in a downtrend is not a very good idea. So we should still expect this to break through here, make some lower lows. We'll look for some accumulation. If we get the accumulation in this area over here, then we're going to be looking down towards the 11,786 down here as the next key level of support from the US dollar index. So we go into this week really with a bearish bias on the US dollar index and an expectation of further declines. So that will give us a slight bias on the euro, the pound, the Aussie, and the New Zealand to the upside, okay? Now, if we go and have a look at oil, now we look at oil because of what I said earlier, which is that oil has a very strong correlation with the Canadian dollar. So if oil is pushing to the upside, very often you will see the Canadian dollar pushing to the upside as well. And if oil is moving to the downside, very often you will see the Canadian dollar moving to the downside as well. So, but those of you who have been in the room saw recently where we had oil pushing to the downside and we had some very good news come out of the CAD, and the CAD was going up and oil was going to the downside. So you can see that it's a correlation, it's not an exact thing. So just bear that in mind. Now, on oil, we have, if we zoom out a little bit, we have what potentially is a very significant reversal in oil to the upside. We were looking last week really because this was in a downtrend. It's been trending to the downside like this, and we were looking at this really as a correction. And there is still a very good chance that this is still a correction and that they're going to be looking to trade this to the downside. But we have to look at what it's doing right this minute, and what it's doing right this minute, it is trending to the upside. It's moving to the upside like this, so we have no choice but to expect a continuation of this move, and unless we get a reversal, we will be having a bullish bias on oil. We're going to be expecting to see a further increase in the value of oil over the next week or so. Now, we do have a target to the upside in oil at the 50.524. Now, we're expecting this to be the next key area of resistance on oil. However, we do also have a target above that at 51.97. So if we can get above the 50.534, then we're going to be expecting an increase in the price of oil again to 51.97. But we may have a little bit of a pullback here first, possibly even a retest of the broken resistance area over here at 49.58. So we're expecting maybe a little pullback in oil before an increase in the value up to these two areas here and here. Now, that should correlate into strength in the CAD, but we'll just have to wait. We'll just have to wait and see how that plays out. So just bear that in mind if you're looking at trading any of the CAD pairs. So with that in mind, we're going to now have a look at a couple of the majors and some of the opportunities that we're looking at this week. Now, we know that we're looking for potential further declines in the US dollar index this week. We had a key level of resistance broken on the euro US dollar at the 1.1580 roughly over here. Now, I'm expecting a continuation up to the targets here at the 1.18084 and then also up towards the 1.18570. Now, you can see from where we're sitting, we are forming this kind of pattern, which is a continuation pattern to the upside. However, depending on how you trade, and we always trade with a minimum of 3-to-1 risk to reward, you may find that with this, we need a little bit of a pullback, maybe even to retest this area over here first, before we can start to look at initiating longs in this trade, because from where it sits now, it's a little bit close to the target, so we'd like to see a little bit of a pullback, but I do expect these targets to be hit this week if we see that devaluation in the US dollar index and a continuation of the downtrend. So that's what we're looking for in the euro US dollar. Now, if we go and have a look at the next one we're looking at is the Aussie US dollar. Now, the Aussie US dollar, we know from the spreadsheet that we just did that we are having, I can take this off here actually, this was our target from last week, the 0.830070. This was the target we were looking for it to trade into last week. Now, so I'm going to take this off here because I don't need this on here anymore. Now, if you look at the Aussie US dollar, it has started to push to the upside, and it got a bounce from the target that we highlighted last week as people started taking their profits. So everybody who bought in over here sold over here, and that's what pushed the price down. So we're looking at this now just as an opportunity to re-enter this to the upside at a better price. So we're looking at this pullback to give us a better opportunity to enter this, and now we're now looking for targets to the upside of the 0.8100 psychological area, which is the next significant area on this pair. And then just above that, we are expecting as well, if we can get through the psychological level of 0.8100, we're expecting price to trade into the 0.81420. Now, if we remember by looking at the weekly technical assessment, weekly fundamental assessment that we just did on the spreadsheet, we know really that we need to be involved with this. If we're going to capitalize on the interest rate decision tomorrow morning, we need to be involved in this sometime today. And we need to hopefully get a little bit of a push up, which will give us some room between our stop and the price when the interest rate decision comes out. So this is what we're looking for on the Aussie US dollar. Now I'm going to give you one that we're looking for, which was not in the weekly forecast. So this is something that only you guys and our own subscribers will see. The next one we're going to look for is the Euro Japanese Yen. Now, the reason we're looking for the Euro Japanese Yen, and in fact you can see, let me just take this off, we have an entry here. So we have an entry on the Euro Japanese Yen in the lower time frames, and we're looking for a continuation to the upside. Now, we don't have a target here, but I can tell you we are looking for a target to the upside of, let me just get it for you guys. We are looking for a target of the 132.60, which is here. So again, this is something I'm just going to give to you guys at the who are here with Portex. Now this is a pretty good trade because, as you can see, we have a very, very big target on the Euro Yen. Now this may take a week, it may take it may take a couple of weeks, and we may even first of all see a little bit of a pullback. You can see we have this kind of pattern here. Can everybody see that? So price has been consolidating in this area here, and we may even get a touchdown here of this trend line in the bottom of this kind of wedge pattern before we start to see a breakout to the upside. And we are looking again, as I said, to the target of 132.600. Now, if you can get involved in this trade and it does start to break out to the upside, maybe there'll be another position to add over here somewhere, then this is a trade that you can hold for a while, and you should be able to get a very, very nice risk to reward ratio on this trade. Unlike in the euro US dollar, for example, where you may have to be a little bit nimble to get involved and to get it to that target. So that's what we're looking for in the Euro Japanese Yen. Possibly even a retest of this area down here will be the best place to look for bullish formations on the lower time frames and also to initiate your longs in that pair. So I'm going to go and show you another one now that we're looking at as well, which is the Euro Pound. Now, the euro pound is one that was in the forecast, and you can see here we are in an uptrend in the euro pound. Excuse me. Now we're looking for excuse me, we're looking for a continuation, and we're looking for more higher highs to come in and follow these higher lows. You can see price has been accumulating at this, it broke above this key level of resistance, which was over here and also further back here. And since it broke through there, you can see that it has been accumulating, and it has been for nearly a week. I think this is actually an entire week over here of just kind of sitting around this previous resistance level. So the good news is that it does seem to be acting as support, and this resistance level, okay, it looks a little bit messy, but it does still look like this is broken as resistance, pulled back as support, holding as support, and now we're looking for moves to the upside in the euro pound. So the first target we have to the upside, pretty much from where we're sitting now, is the 0.9034, and the next target we have to the upside is the 0.90916. But the only problem we have is we do have a lot of news coming up for the pound this week. So just bear in mind, what we are probably going to be doing ourselves is position ourselves into this early on in the week, and by the time Thursday comes round, we should hopefully either have hit the targets and we can be out of these trades, or we will have at least enough room in order to actually give us a decent space and not get stopped out just through the volatility and basically ride out that event. So that's what we're looking for in the euro pound. I mean, we've done 4 pairs there, so we're coming up to the half an hour mark now. So I think what we can do is we can open it up to any questions. So I can see there's a question here. So if you've got any questions, guys, tap it into the box and I'll be happy to answer them for you. I can see there's a question from Anthony. So Anthony says, what size stops would be in place? So the thing with stops, Anthony, is that you want to place your stop loss as a percentage of your account. So you don't want to say, I'm going to give, say, 50 pip stop, or I'm going to give a 30 pip stop. What you need to do is you need to place your stops based on the technicals. And the reason I'm explaining it to you this way is because the answer to your question is that you cannot give just one size for a specific stop. It has to be related to the technicals on the chart at that time. But what you want to do is, whether it's 300 pips or whether it's 12 pips, the value of that stop should always be as a percentage of your account. So you know that on each trade, if you have a losing trade, and you will have many losing trades, because all traders, even traders who make money, always have losing trades. It's just part and parcel of trading. Now, if you're trading and you set your stop, we in the ETI live room always suggest a 0.5% risk per trade. So if you're risking 0.5%, it doesn't matter whether it's 50 stops or 50 pips or 100 pips. That will always be 0.5% of the overall account. Does that make sense, Anthony? It makes sense. Okay, great. Yeah, Dave, it's okay. Yeah, we done Euro US dollar, but I'll go back to it for you. So looking at the Euro US dollar, we have 2 targets to the upside. Now, here's the thing with these pairs, David, is that the targets that we highlight are the next key resistance areas on the chart. So one of the problems we have is you can only, once you highlight and you identify the next key areas and the targets to trade for, one of the issues you can have is, for example, at the moment we're pressing quite close to these targets at the moment. So yes, we're looking for these targets to be hit. Now, if we can get involved in the lower time frames over here, we can get the correct risk to reward, then we'll be looking at taking our trades from this area over here. However, what would be good is if we start to get a pullback, that means it leaves us more room to the targets over here. So if we start to get a pullback into this area, maybe over here somewhere, so you got a trend line up like this, maybe get a little pullback and a retest over here, then we will be able to get, rather than say a 3-to-1 risk to reward, we might be able to get a 4, 5, or 6-to-1 over here. So these are the targets that we're looking for in the euro US dollar. We've got the 1.18084 and also above that the 1.18570. So our trade really on this pair is like this. Is that okay, David? Running 100 pip pullback. Okay, let me have a quick look. So when you say you're running 100 pip pullback, do you mean you are? What do you mean? You're waiting for a pullback? Or you're already in the trade and it's pulling back, and you're riding out the pullback. Yes, to 117.23. Okay, so you're in this. Are you in this to the upside or the downside? You're selling. You're selling. Okay. Well, just bear in mind that the euro US dollar is in an uptrend, and the issue you have at the moment is. Generally speaking, if you are selling this and it's now in an uptrend, there's really no reason, in my opinion, to still be in the trade. Apart from the psychological side of it, which is that obviously all of us, especially in the beginning, as human beings, we are scared to take losses, which is one of the reasons we hold on to trades very often. So just bear in mind that this is an uptrend, David. That's all I would say. Yeah. Okay, great. Okay, so Anthony says, would you target a pullback and place a trade at this point, or would you use Fibonacci to find an entry point? So when in the ETR live room, Anthony, we look for lots of different confluence. So we do use Fibonacci's. Fibonacci's is a good tool to use when looking for a pullback, but there's lots of different things that you need to look for, and you also need to look for a trend reversal in the lower time frame. So for example, if you are getting a pullback like this, you don't want to be buying this pullback just kind of just on the hoof. What you want to be doing is you need to go down onto the, so you have your move like this, and what you want to be doing is you want to go down to the lower time frames when you see a pullback. So we do our evaluation in the higher time frames, but we enter in the lower time frames. So if we get a pullback into this area, and I mean even where we are now, this for us is tradable. This little move here is tradable for us in the live room. We don't need a retracement all the way back down to here. And this is one of the difficulties with Fibonacci, is that if you don't understand the structure of the charts on the lower time frames, and price, say you pulls back like this, you can have 1 Fibonacci level, 2 Fibonacci level, 3 Fibonacci level like this. Now, which Fibonacci do you enter at? Do you put your entry order over here, or do you put your entry order over here, or do you put your entry order over here? Well, a lot of people would just guess, so they would just say, well, I'm going to have it come down to say 50%. So I'll put my entry here, put my stop somewhere over here, and then this will be my trade, which is fine. I mean, that is actually, a lot of people do trade like that. There's not a problem with that. But if you want to get really good, the problem with that is that if you're aiming for a target over here and you're entering here and your stop is say somewhere down here, all of your trades will forever be 1-to-1 risk to reward. Now, we only take trades that are 3-to-1, which means that every time we risk 1x, we stand to make at least minimum 3x. So if you risk 1% or we risk 0.5%, we stand to make at least 1.5 or 2, very often even up to 2.5-3% per trade. And that is what will really pay off for you in the long run. Now, the only way you can do that is when you have a Fibonacci retracement, say like this. You need to be able to go down onto the lower time frames, and when the price approaches these Fibonacci levels, you need to be able to see whether price in the lower time frames is still trending to the downside, or whether there has been a reversal in the lower time frames at the Fibonacci, and then that when you see price reversing, so you don't want to be buying it on the way down, you want to wait for the reversal, and then you need to take it. And then if you have a very, very tight stop in the lower time frames, you're going to see these targets are like 3 to 1, 4 to 1, 5 to 1. Does that make sense, Anthony? Yep, makes sense. Okay, great. Okay, so do we have any more questions? I can't see anybody typing, so I'll just give you guys another, say, 60 seconds just to see if anything's coming through. Okay, well, it doesn't look like anything's coming through. I see actually someone someone had their hand raised here, David, but I think I've answered David's question. No questions, but just to let you know, this is my first ever trade. Oh, okay, it's your first ever trade. So you've got you're just starting out then, David, yeah? Yeah, okay. Well, my one piece of advice to you would be, if you are just starting out, I would strongly recommend you go and find somebody who knows the markets and who trades it. Obviously, we provide that service at ETI. We teach people how to trade it, but it doesn't have to be us. I'm just giving you some basic general advice, which I would say the best thing you can do is find somebody who knows or who's being profitable in the markets, and really track them for maybe a year or something, because that way you will learn things much quicker. And I found that out personally the hard way. We know when I first started, I would just take sort of punts here and there, and eventually I actually became very friendly with somebody who was being mentored by some pretty big city traders, and they told me how to do it, and it really opened my eyes. I mean, once you fully understand how they operate, you can capitalize on it and you can take advantage of that. But that would just be my advice, David. So like I say, it doesn't have to be us, but I would definitely recommend finding somebody who you can track and just watch them and learn from them. That would be my advice. So anyway, it doesn't look like there's any more questions. I hear about 7 hours in session, but I hear don't trust most. Yeah, that's why. Well, that's one of the things that we do is we all of our account goes online, David. So every trade we take, you can check it by a third-party verified site, so you can see that the account is, you can see when the account's growing, when we have losses, etc. Because it's not good to. You don't want to be looking at, say, 70 or 80 or 90% success rate. If you see somebody who says, you can trade and you can win 9 out of 10 trades, then I would be very suspicious, because myself personally and a lot of professional traders that I know, even some of the best ones, they will have a win rate of about 40%. So you can see, if you go down and you look at our third-party account, you can see that our win rate is about 30%, 31%, give or take, which means that out of 10 trades that we take, seven will likely be losses. But because we only take 3 to 1 risk to reward trades, it means that over the long run, that you can make money, and you can make pretty decent money, and that's really the way you really want to be doing it. Because we're taught from a very young age, aren't we? I mean, when we go to school or university, we're taught that in order to if you get 60 or 70%, for example, in a test, that's a C grade, or it's a D grade, it's not very good. So the idea that you can have a win rate of 30% or 40% to a lot of new traders is I think people find it very confusing, hard to get their head around. So anyway, I hope that was helpful for you. Yeah, no problem. We're here every Monday, David, so you're welcome to drop in and ask any questions and everything if you want to know anything. So we're going to wrap it up here, guys. Hopefully you enjoyed today. I'll pass you over to Ben if Ben wants to add anything.
Thanks, John. Yeah, thanks everybody for attending today. If you're new to the room, then we do these every Monday. If you didn't get a reminder email as well, I know there was one sent out an hour beforehand, but you will get as of next week, you will get one 5 minutes before as well. That will alert you to the fact that the webinar is just starting. John touched on the fact that non-farms are this week, so on Friday. So very important news event. We've actually got an article been released about it recently. So if you head over to the Learning Centre, which is blogs.portexmarkets.com, that's blogs.portexmarkets.com, you'll see there's a list of articles there, and there's one recently been done on non-farm. So take a look through that if you are new to the markets. Outside of that, that's about it. It just leaves me to say thank you again to John, and hopefully we'll see you all next week.
Yep, see you all next week, guys. Take care.